Hi. So my name is Daun. I'm the president and CEO of Koryx Copper Inc. It's a TSXV listed copper development company with a very interesting asset in Namibia and some other stuff in Zambia. And we recently came in, and our story is we're going to reintroduce credibility, right-size, optimize, advance, permit this Haib copper asset that we have in Namibia, prove its economic potential, and set it up to be built.
Hi, welcome to London. Good to see you. I love doing these interviews in person. Right, we know the old version of Coryx. In fact, before it was Coryx, we do, what's going on there. It's kind of got a reboot. Okay, new management team, new board, money introduced, and potentially we're talking about trying to release the value that there is. Right. So let's start back. Yeah, let's say now. Obviously, that gives a bit of credibility. So maybe give people a bit more background on you.
Sure. No, thank you. That's a great intro. So I'm a Namibian citizen, mining engineer, sort of been in the industry 30 years, but the last 10 years as a capital markets entrepreneur, I guess. My first success was co-founding and advancing the Chikoto gold asset in Namibia, which we ended up selling to B2 Gold. They did a great job building a very successful gold mine, still in operation. So we used that track record. So that was in 2012 when we sold it. Mm-hmm. Then did some other things. In 2015, I founded Osino, which was a Namibian gold exploration company looking to do it again.
Yeah.
And we did. So put a good team together, met Ross Beatty, brought some quality money in, made a discovery, raised about 100 million Canadian dollars in 6 years, spent 90 of it, made 2 discoveries, basically found a real project with about 3.5 million ounces, 3 million ounces, 1.5 million, whatever. Took it to DFS, and then at the end of last year, we got a bid from Dundee Precious Metals, sold the company.
Wrangling.
Yes. It was an okay deal, but the value wasn't really where it should have been, but obviously weak gold equity markets.
Yeah.
And then a few months later, it got trumped by a Chinese bid, the entire gold, which is now Shanjin. Again, a lot of skeptics. People thought we wouldn't be able to close it, never get the approvals, but we did. That deal closed in the end of August. And so in the lead up to the close of that deal, Alan Friedman, my business partner, Canadian business partner, and I thought we have this great Namibian platform in a way, and we've got credibility there. We know our way around there. I'm in Namibia, let's try and find something else. And then this Koryx Copper, previously called Deep South, is obviously, it was a company with a checkered history and a lot of legacy issues with a very real asset, large scale, load rate, and a few other issues. And we thought we could get involved in, so we got approached by some shareholders in Deep South.
Yeah.
They invited us in. We made a constructive approach to Deep South existing management and shareholders. They allowed us in. We invested money on the proviso that we could take over the management control of that company, which we have.
Yeah.
Now we're firmly in the saddle and building the story.
There you go. Track record history, right? Been there, done it twice. That's very comforting for people, learning and listening to this. And we'll come back to the kind of, let's say, checkered history of the company, not the asset per se, the company in a second. You also assembled a few people around you this time as well to can support you. So can you just talk a bit about that?
Sure. I would say maybe I'll give myself a little picture if you allow me, just brag a little bit. I think I consider my core strength to be execution, getting stuff done, doing, crossing the T's, dotting the I's. That's my key strength. And that is why Osino worked against the odds. But obviously I didn't do it all myself. It's the team. So how do I get things done is I think I'm pretty good at identifying strengths and weaknesses in people and putting good teams together. That's what I did at Osino. Put a high-class exploration team together that made a superb discovery through cover and subsequently financed it, etc. So it's about the people that are around me. Now, of course, Osino has a new owner. I'm still involved helping with the transition. But some of the people that were there do not have a future with Shanjin, so I took them with me. So effectively, Deep South, which was renamed Koryx Copper, has effectively the old Osino team. There's Alan Friedman and I as the corporate leadership. I'm the president and CEO. Alan is the director. And then we have the CFO ex-Osino, the study manager ex-Osino, the metallurgical consultant ex-Osino, etc. So a lot of people ex-Osino, and some of the geologists, etc. And that it really helps having worked together for so long in country, knowing each other. And I mean, it goes beyond that. It's not, when I say talking about teams, it's not just operating team, it's also financial supporters, Ross BT, resource capital funds. A lot of the private individuals that made money on Osino have followed us into Koryx. So it's really very much an Osino coming back together, Osino 2.0.
Okay, so you got the band back together. That's good news. Comforting. You also recent new addition as well, I know from other places.
Yes, Trevor Farber. Thank you.
Thank you. Yeah,
he's a key addition to the team, because one of the things, I think one of the areas at Osino that we recognized as a weakness at the time was the fact that Osino, me as the founder, co-founder together with Anna, I was so associated with that company. I was constantly the only talking head. Mm-hmm. And people saw me as a promoter, not necessarily as a mine builder. And given that Osino had was building a strong standalone plan, we needed more technical depth, real mine building expertise. Now, given that Koryx is a copper company, and I'm not a natural copper guy, I'm a gold guy, even though the techniques, etc., are very similar in terms of mining and so forth. So we recognized early on that we needed more bench strength on the project management side, with people that have built mines before, that have done it before. We have a very strong technical and study team, but we need executives that have done this before. And Trevor Farber is a mining engineer, is a year older than me. He's got great energy. He was involved, he was the COO of Alphamin, which became a billion-dollar company. Before that, he worked for Meteorix, and Meteorix was a very interesting, Canadian and UK investors may not know it that well. It was a very interesting diversified copper miner in Zambia and South Africa. So Trevor has a lot of copper expertise, which is what we need as well. So we're very happy that he's agreed to.
Yeah, that's when you're interested to learn more about the track record. Let's talk about the theme of copper before we talk about the asset itself. Okay, so I think you're a gold guy. We didn't go for a gold project. So copper, you're drawn into copper. Why? Why were investors be interested in it? Why were you interested in it?
So the main reason was it was an opportunistic move, because here was a great project. You could say it the Haib project, a large project that has scale potential. And with Osino, we built Osino from nothing. We did greenfields exploration through discovery all the way to selling what's going to get built. But I'm a mining engineer, I'm not an exploration guy. I'm not, if I can avoid it, I wouldn't want to be in greenfields exploration. It's extremely difficult, very risky, etc. So the Haib project, which is the copper project that we have in Koryx, was advanced, has a strong pedigree, decades of technical work had been done on it. There's some questions, great, and other things we can discuss it. But that was the main reason. We thought, here's a project of scale that's misunderstood, has been in the wrong hands for too long, and our key strength is right size, optimize, bring credibility. Of course, the fact that, to answer your question around the macro environment, the copper macro environment is fantastic at the moment. Whether you are a believer in the sort of decarbonization revolution or not, does not matter. The world needs a lot more copper, and there aren't a lot of copper projects out there. It's the ones that are out there are in difficult jurisdictions with very, very long permitting timelines. And I think what makes this project unique is that, and it gives it real scarcity value, is the fact that it's there, it doesn't have to be discovered anymore, it only has to be made better, and then needs to be permitted, and utilities, power, water, all that needs to be proven. But in the Namibian context, that process is very predictable. We just have to do the studies, we'll do the work, cross the T's, dot the I's, and we'll get there within a very reasonable time frame. It's 3 years, maybe less. That's unheard of. And that was the opportunity, that's why we got involved.
Do you still, because obviously lots of critical mineral lists being formed all the way around the world, and with whatever the latest catalyst is, I think at the moment it's AI data centers, right?
It is.
And the copper needed for that, and the copper needers get energy to those data centers, and EVs are still relevant, hydrogen is still relevant, and growing population means that copper is still highly relevant. But Africa, when I was working in Africa, I used to view that as a sort of shopping basket for the world. We've now kind of got this kind of east-west divide forming between, America, China. We're seeing in energy across the board. What role has Africa got to play, in Namibia specifically, where been there, worked there? It's to me, wonderful country to visit and let them work, but what's the role to be played, and how do you play it?
Yes, of course, I'm very partial to Namibia, having been born there and having grown up there and still being very connected and very deeply rooted there. So I also love Namibia. It's just a great place. For your European and North American listeners, let me say it's very unlike you imagine Africa. It doesn't have many Kalashnikovs, it doesn't have Ebola, it doesn't have jungles, it doesn't have fevers. It's a very organized place, very stable, very business friendly, and remarkably very mining friendly. Like Europe has almost moved beyond mining. People think that you can survive without mining, which is a very naive viewpoint. In Namibia, what we need most, first and foremost, is we need socio-economic upliftment. People need jobs. And mining is a major catalyst to achieve that. So therefore, that's sort of the micro factors in Namibia. It's just a great place to develop mining projects. Within Africa, you asked me what's Africa's importance in the copper space. Of course, in the DRC, you have a large part of the copper growth, production growth in the next few years is going to come out of Central Africa, Zambia, and the DRC. Those copper projects are very different to ours. Ours is a porphyry. Those ones are sedimentary copper, generally higher grade. Beautiful projects, of course, like, Mr. Friedland and others are promoting some great projects. Ours, you cannot compare with them. Ours, you need to compare more with the Chilean, Andean, South American porphyry type deposits. Maybe another thing I can say about Africa is that Southern Africa is very different to West Africa. Obviously, West Africa is at the moment in the news for all the wrong reasons, like coups and Kalashnikovs and all those bad things. Yeah. Southern Africa is very stable. Namibia is very stable. So in many ways, I consider the political risk in Namibia to be less than in parts of North America or Europe, for that matter. We do have an election this week, which was important. So there could be some. There was an election in Botswana recently where there was a momentous change with a really
amazing.
And Namibia, we don't know where it's going, but we do expect continued stable political spectrum.
Yeah, it's quite it's Africa light. It seems so. It's quite benign environment in that sense. Less political binding. You see elsewhere, and certainly a lot less activity. Which is that in West Africa. Look, let's get on the asset proper. Okay, so obviously, you've got a track record. You've got a team are used to getting projects to work. This is a project which had a lot of bumps along the way, right? It was cash constraint. It had a PEA. It showed the scale. The grade was low. People didn't believe it. They were struggling with, I'm saying, how do you actually mine this? The rock is quite tough and unforgiving in terms of processing. It is the perception out there. You've looked at this and said, well, actually, I think I can find a way to release the potential value here. Talk to me about that when you first came to the project, what you saw.
I spent some time on the buy side as an analyst, and I learned when you look at junior mining projects or opportunities, I think there are 5 factors you need to look at. And this is my roadmap for how I'm going to deliver value out of Haib. The first one is leadership, management and leadership. The second one is the quality of the asset and the jurisdiction. The third one is the growth, how are you going to make it better? The fourth one is financial, what is the financial situation, who are your supporters, etc. And then lastly, what is the valuation? Even if the first 4 are perfect, if the thing is already overvalued, where are you going to go? So I'll speak briefly about all these 5. In terms of leadership, because I consider building the puzzle comprises building around these 5 aspects. Mm-hmm. So firstly, on leadership, I think I mentioned at the beginning, the company has new leadership, corporate leadership, new board of directors, new CEO, new COO. So we've introduced top quality leadership with a track record. The management team, I mentioned that earlier, has been brought over from a senior, very capable project advancement and metallurgical specialists. So therefore, in terms of the team, I think we're in a great place. We have a core team in place, and we will continue to grow that because we expect our activities to grow substantially. So therefore, number 1 ticked. Number 2, the asset. That's the most important one. In this case, we have the Haib Copper Project. It's an open pit porphyry. It has a long-standing, very respectable pedigree going back to the 1970s. It was discovered by the Germans during colonial days, but the first real credible technical work is done by Rio Tinto in the 1970s. They drilled about 70,000 meters, proved up a credible resource, which was fairly low grade, of 0.3% copper at the time. And copper prices were low in the 70s. Rio Tinto ran off, did other things, so they ended up selling it to Teck. Teck did some additional work, but again, this was now 80s and 90s. The heart was there. Copper prices weren't where they are. And then it was sold to a company called Deep South, who's been sitting on it basically for the last 20 years. And Deep South was always typical Canadian, underfunded, maybe didn't have the same drive, had issues. And so in some respects, the project got tainted because of that more recent history. But if you look at the project itself, it is a porphyry. It's very consistent. Oh, I should digress. Just brief geological description, that's key. This is one of the oldest porphyries in the world, and that is important because, unfortunately, it's negative, but it's okay. We'll deal with it. Being one of the oldest porphyries in the world, if not the oldest, means that the top of it has been eroded away. Now, the reason the big porphyries in South America work or have worked, the low grade ones, is because of the supergene enrichment at the top, the oxides. Mm-hmm. Those typically pay for the capex, and then thereafter you just mine sulfides and money for jam for decades. In our case, that supergene enrichment has been eroded away. And that's one of the reasons I believe why Haib has not been developed yet, because it's just a more complicated project than some of these others. But now fast forward 20, 30 years, the world has moved on. To Deep South's credit, what they did well in the last 2 years is that they identified certain structurally controlled elements to this deposit, which is different to a typical porphyry, and which gave them quite a lot of additional high grade, some very good intercepts. They changed the drilling direction. It's an old story. Started intercepting these structures, which the Rio Tinto drilling, which was vertical, and missed. And so with a very limited amount of drilling, I think it was 5 or 8,000 meters of drilling that was done late last year, early this year, we have managed to get the grade from 0.3 to 0.35%. That's only 10%, 10-15%, but it is very significant for a big project like that. I mean, I must tell you the numbers. Haib has 2.5 million tons of copper. It's a billion ton resource.
Yeah.
Call it 5 billion pounds of copper, depending whether you work in tons or pounds. It's a big project. It's a globally significant project. But its key question marks at the moment are the grade and the processing route. You mentioned the old PEA. You can discard that because that old PEA was based on bacterial heap leaching, which is not feasible at this scale. Okay. So one of the first, and we recognize that from the beginning, we said what we have to do is we need to squeeze this project to have enough grade that we can pay for the higher capex, which will allow for a conventional processing route. Conventional processing.
Keep doing it. So starts that into
Sorry,
but it's fascinating. It's fascinating. Is discard the old PEA. Why? Just get
okay, I'll tell you again. Sure.
Yeah.
So
you can learn from this.
No. It's good. I feel bad that I might be becoming too technical, but it's key to understand. It's actually quite simple. So heap leaching means you mill the stuff and you put it on a heap, and then you leach it with bacterial leaching. That works. It works in the lab. It's been done many times before. The risk with it is if your bugs die inside the heap, and it's all sitting on a heap as opposed to inside a leach tank, how do you ever get to it? So that heap could die on you 2 years into this project and your project is dead, very simplistically speaking. So heap leaching bacterial heap leaching at a large scale like that is far too risky. Nobody would finance it. The reason Pierre and his team went for this option in the past, in the PEA, is because the capex is much, much lower. The conventional wisdom on Haib was always it cannot carry the high capex for a conventional processing route, because conventional processing route means crushing, milling, flotation, and then you produce a float concentrate and you sell that to a smelter.
Right.
But the crushers, the milling, and the flotation, that's big.
It's outbacks in energy.
It's probably $1 billion, $1.5 billion.
Yeah.
And Deep South made a strategic decision at the beginning that they thought they can promote this project better with low capex bacterial leaching. There was an issue with that, twofold. Number one, the process route is not feasible. Like people in the know would know this will never work. Number two, I think they were probably too worried about the capex, because capex will be dealt with by whoever ends up building this project.
And the key phrase he used there was promoted better.
For sure.
Which is right. Okay, so mine builders look at things differently, right?
And for us, what sums us up, the Koryx opportunity or the Haib opportunity is, well, what we have to do is we have to bring credibility back into the story. leadership, financial, and technical credibility. Technical credibility comes through the quality of study work that you do, number one, and it comes through the credibility of the plan. And the plan has to involve a conventional processing route. And then bear me out on this one. So then we would be producing a concentrate that will get trucked or railed to a smelter in Zambia or in Namibia. There's a smelter in Namibia that's idle, or to China. And added onto that, we will hopefully have a bacterial heap leach as well, because we will be producing lots of low grades.
Yeah.
But we have to do a lot of technical work to prove that, and we don't rely on it. So it's going to be a two-stream type of opportunity. Now, the beauty of Haib, I'll let you come in just now. The beauty of Haib is that because of its size, because of its massive potential, because of the fact that it's open pit, you've got the life of mine to be able to do these kind of things. This is a project that's going to end up costing $1.5 billion of capex. Obviously, I'm talking huge numbers here. We have to prove this. It's big numbers, but it's going to have 20, 30 years of my life, and it will be able to sustain, or we need to demonstrate that it can carry that kind of capex.
Right. So it's just really, really clear about the business plan here, because I think it's really, really important for things like this. People don't understand what they're walking into. Us investors, if whatever the previous incarnation was saying, we're discounting. This is Koryx 2.0 as far as I'm concerned. Okay. You've still got to have a plan which says, like, our model is, we'll set this up for someone with a bigger balance sheet to come along and deliver. We'll do things technically correctly so that we've got credibility in the market, but also got credibility with potential buyers, because they can see this thing and see the signals from a mile away. So if that's the model that you're going to employ,
that is exactly the model.
Right. Okay. So we're really clear where we're walking.
Let me re-emphasize that because I mean, with Osino we did exactly that. We said from the beginning, we found a gold project. We said we'll permit, advance, grow it, do the technical studies, and then build it if we have to, but preferably hand it on to somebody else. In this case, this is a big project. I can almost tell you, I can almost guarantee it at this point. There's no guarantee. This project is significantly bigger than what we had in Osino. We sold the Osino project for 380 million Canadian. This project, expressed on a gold equivalent basis, it's about a 12 million ounce deposit. This is a big project, even by global standards. It's too big for us. However, our sweet spot is in the permitting, de-risking, advancing, getting it ready to be built, because that's when the big players come in. Okay. They don't want to deal with it.
So let's stick with technical for now, if you don't mind. You need to crack the code, and you need to do that or demonstrate that in a way that you can demonstrate. You can show the economics through whatever studies keep coming through here, so that not just the market but any potential buyer can see. How do you do that in a way which you can finance things going forward? Like I get the freaking thing. Like you've got access to money, and there's it was 18 plus whatever million going to it. At the moment, so the money side of things, you've got access to the right people who believe in this story. Even they will need you to deliver things in a certain way going forward. It's like, what have you done with the money we've given you? And then we'll maybe talk about giving you some more, right? So what are those things that you need to do in the short term?
Very specific, I can tell you. So we're planning to deliver a new PEA. We're calling it the enhanced PEA. It's different to the old one. You can discard the old one. There's a new PEA which will come out middle of next year.
Is there anything about the last PEA which is useful to you?
There's been, this project is lots and lots of great work.
Is the historic data relevant?
It's very relevant. Absolutely relevant. The drill data is relevant. Okay. A lot of the metallurgical test work was done really well.
Yeah.
Lots and lots of relevant work by multiple operators.
Validated?
No.
Have you validated?
No. Some of it. No. Of course, but it's all been done by credible operators. Rio Tinto, Tech. Deep South used credible consultants. They did good work. It's just that it didn't fit together very well, and the end result, the PA, why I say discarded.
The decision was financially based, I suppose, to say.
And it was the bacterial heap leach process on its own.
Yeah.
That can't work.
Okay.
So therefore, our plan is very simple. PEA will come out by the middle of next year, and that PEA will comprise a conventional processing route, crushing, milling, and flotation, plus bioleaching. We're not discarding bioleaching. Bioleaching becomes a secondary to process the low grades.
Yeah. Okay.
And the PEA will estimate the capex and opex and should demonstrate, hopefully, we want to achieve that, demonstrate the technical and financial feasibility of such a project. That's the PEA. That's what a PEA is there for. we're doing that work to the highest level of detail that we can, so that we can very quickly follow it up with a preface. And a preface, typically, you might be aware of it, but maybe for the benefit of your users, your viewers. In the preface, you do all your trade-off analyses to figure out what the actual process route will look like. So at the end of talking about potential similar partners, you need to be at the pre-fees level of detail, and that we plan to be at by the end of next year. So that's the studies. In addition to that, we are going to do intensive drilling, growth drilling, and definition drilling, meaning quality. So growth, this project is open at depth. It's only been drilled down to 200 meters. It can easily say it has 30 to 50% growth potential to the size. But that's not the primary objective, because the project is already very big. We don't need to go from 30 to 50 alive by. But we need to chase the high grades. Yes, we need to bring in the byproducts. The byproducts were never brought in: gold and moly, because bacterial leaching doesn't extract gold and moly. So there's potential for byproducts which will add to the grade, chase higher grades, and then infill drilling to be able to constrain the model more, which typically results in a higher grade. If all of that works out as we plan it to work out, we should be able to have another significant bump up in grade to hopefully 0.4, 0.45, which is needed and which should render this economically feasible project. Then we are really at business.
That's the starter project. So this, and obviously that you're saying there is the higher the grade, the more the margin, and the cost of that, reduced cost of capital, cheaper money, blah blah blah.
Sure, but what we need to do, we need to generate enough revenue to pay for the much higher capex. I forget the number, the capex number, the old PA, it was $300 billion, 400.
Forget that.
This one is going to be 1 to 1.5 billion.
Yeah.
That needs to be carried through higher revenue. Where do you get the revenue?
Yeah.
Throughput and grade.
Right. And just to be clear, remind people who may just suddenly tuned in or, concentrating, but that's not your problem, that's the next guy's problem in terms of the capex. You're not raising 1.5 billion.
No, we're not there yet. But we've got to demonstrate that it's feasible.
Yeah.
So, and we've got to do a quality estimate of the capital, the utilities, water, power, all these things.
Yeah. No, see, you came off the back of a CNO project, so yeah, it's recent, but no, not recent enough. I mean, is inflation still?
No, inflation is absolutely still there.
Okay.
Yeah.
But where was the equipment pricing coming from? Out of China?
All over the world, but it's very much an exchange rate question.
Yeah.
But like Turkey, China, South Africa, USA, Europe, all over. But it's very interesting now with Trump being back in power, the strong resurgence of the dollar. Yeah. Currency movements change that. Yeah. But it's very relevant question or comment you make, because what helps us hugely is the fact that we've got these relationships with engineering groups and suppliers, etc., from multiple recent studies that we did over the last 3 years for CNO. So we really are perfectly placed to apply a lot of that knowledge to the Haib project.
Okay. And then, so I will let you finish the kind of five points, but I promise.
Absolutely, that's true.
We take it straight, but you said something else. One of the things that you said your group, your team is really good at is premise and licensing. Now, obviously, Deep South, I think was the original point of difficulty with the Namibian government. I guess they had a long time, weren't really moving things forward, and maybe a bit of shenanigans, I think KRY was suggesting, in country as well. Is all that resolved, and does your track record in country help any future potential issues of a similar nature?
Yes. So firstly, yes, it is all resolved. Okay. The company owns those licenses, but it's an exploration license.
Yeah.
The way Namibian licensing works is 3 years, 2 years, 2 years, so 7 years in total. But it's a use it or lose it principle. If you don't, you have to submit a work program. Yeah. If you don't fulfill that, you lose it. And that's what went wrong with Deep South. They were late in their work program, and etc. Took it to court. To the credit of the Namibian judicial system, it got re-awarded. Yeah. But you are right that it puts us under pressure that we have to deliver quickly and show the government that we're moving this project forward. Now, of course, we have the money. No, we will far outspend the work program. Yeah. We'll spend $10-15 million next year easily, which is way more than expected. But more importantly than that, maybe I'll personally take a bit of credit that the government knows me. I know the regulators very well. And they know that I've delivered, I haven't built them, but I've delivered two very significant mining projects in Namibia. One is B2 Gold, and the next one is this one that's going to get built. And so I do think that we do have that credit. So I think we're in a great position, but we still have to do that.
Yeah, for sure. Yeah, credibility all round, markets and
Yes.
on the ground over there. Okay, and we'll come back to your front five.
Yes, I'll be quick on those ones. So therefore, leadership, good. Asset jurisdiction, good. It's there, it can only get better. Predictable environment. Growth, I said that growth drilling, deeper, high grade shoots, definition, quality. So that's coming, that's where a lot of the money will go. And then financial capacity. That's always a danger with the junior. I'd say when they run out of money and will their price drops. So we basically, it's a Casino 2.0. So firstly, myself personally and associated family offices, etc., are very significant investors in this project. So we are
with cash.
We are not founders. Remember, we had to put money on the table. That's how we got positioned.
Okay.
So that's us, and then we've got Ross Beatty. He's there, fully supportive. Wrote a big check. We've got Resource Capital Funds, Extract Capital, Commodity Discovery Group, and Mackenzie. Tech still owns about 8%. So we've got a great group of shareholders with deep pockets that believe in our vision, and that's great. I mean, we don't need to raise money anytime soon. We've got $20 million by the end of this year, and we won't spend all of it, but this will comfortably get us to a pre-feasibility study, including all the bells and whistles. So in a good position, and we'll take it from there.
Okay. It was 0.4, wasn't it?
0.4, okay. The last one was valuation. Thank you for that.
That's the point.
What does it help if the first four are perfect and the valuation is too high? Now, the valuation is actually the thing that gets me excited, because when I got involved in January of this year at a pre-rollback share price of about 20 cents or so, I forget the exact number. Maybe just to point that out, we rolled the stock back. There were far too many shares outstanding. We got about 65, 70 million shares now. It got rolled back 541. So all the numbers I give you now are current, post-rollback. So Ellen and I originally came in at 20 cents or thereabouts. We did a small $2 million positioning round in May at 35 cents. That brought in Ross and all these names that I told you for a small amount, just to position them. And then we've just concluded this $18 million with the same group of people and others at $1.10. So there have been successive doubling of the stock, but still we are only a $65-70 million market cap company. Now, if you compare us to our peers in South America or wherever, you can do that yourself. We are still grossly undervalued. That's why it's a huge opportunity for investors. Now, of course, I'm sounding like a promoter, but I'm a shareholder myself, and I'm very excited. I think just through delivery, we can still re-rate very substantially from here. And then you still have, once we prove the economic and technical feasibility of this project at a large scale, this is a big project. So then there will be another uplift when, obviously, when it gets to building and potentially when
Right. Okay, by all of the above. I think for me, the management team, great. The asset, I think it's good in the sense of the scale, and I appreciate the model that you're employing in terms of trying to get some higher grade. Moving things 12, 13, 14% it makes a difference. If it can be 20%, even better. And that's the job to be done. And then trying to understand in today's environment, CapEx environment, it's a big CapEx thing. Are you going to be able to demonstrate the economics reasonably quickly? Because the quicker you can demonstrate the potential PEA plus or minus 30% potential, that for me is the big step change.
Yes, it is. Right? Let me give you something else I haven't mentioned. Make it easier. Too many numbers. You're 100% right in what you say. That is the big step change. We have one more trump card, and that is the Namibian operating environment. Weak currency, not a US dollar-based economy like most of us in South America. We are at 400 meters altitude. If you look at these, our comps, Solaris, Copper, Albemarle, whoever they all are, they are generally ATEX, or Chile. They are generally at 3,000 to 4,000 meters altitude. They have to desalinate seawater and pump it to that altitude. That's huge. In our case, we're 7 kilometers from the Orange River. I'm not suggesting that we will only supply ourselves from that.
Because you're
right down south. South.
So how far away from the coast?
We literally, maybe not 7, could be 10 or 15 kilometers, but we're very close to the Orange River.
the river.
the Orange River, which is
Would you be allowed to take water from
definitely would, but there's of course a significant permitting process that we have to go through. So water, power, transport are the main utility questions.
Yeah.
My point was that our current grade is 0.35.
Yeah.
With additional infill drilling and bringing in byproducts, etc., if we get to 0.4, 0.45, more constraining, and yes, and a lower operating costs, lower capital intensity, lower operating costs in Namibia, I think we're going to get there, and that is what excites me.
That's the key. But you answered the question.
That's it.
That's going to be my parting shot here. But you've answered it. Yeah.
Excellent. Thank you.
Appreciate that. That's
thank you.
Exciting for you. And I'm glad you've got the kind of the 18 assembled and the money to actually try to do it as well. I believe watching with it all on has been bated prep.
Great. Thank you very much for having us.